Today is Thursday, May the 30th, and volume on the markets was, on the Dow 30, was about the same as yesterday, which is low. NASDAQ was low, S&P relative volume was low. The day started off, as we've seen so many days, pop up, fade, try to come back after lunchtime, and then just fade away, come back towards the end. But overall, the Dow was up, NASDAQ was up, the S&P was up 0.2%. So everything was mainly green except the financials and basic materials. Basic materials are going to suffer for a while, folks. I mean, this tariff thing is not helpful for basic materials. The breadth was fairly even. So let's just say flat, which means that the market oscillator tomorrow isn't going to change. It's going to remain slightly oversold, not as bad as it has been on the two recent down occasions. So we could see a repeat of the oscillator coming down to these previous two lows here. The summation index has a negative volume of 806,000. So that's just more money coming out of the market. Said that I would tell you a little bit about the bond yield. We talk about the yield curve, and this is what has traders spooked a little bit, is this constant. If you look at the 22nd of April, the green one, you've got this sort of a spoon shaped. We go to the 26th of March, which is the green. So, sorry, this one here, so it started to flatten out, and now it's become more shallow in the 2-year, 3-year, 5-year, and interest rates are dropping off in the long term. So I'm not a bond expert by any means, but this is not what people want to see. People want to see this kind of thing, some sort of building up where it starts low and ends high. And here it's starting and ending, starting at one value, going lower as opposed to higher, and then just not going high enough. Anyways, let's take a look at our markets. The S&P struggled with the 5-minute cloud pretty much all day long, and that was probably the story for the S&P. Just could not get anything going today. So if we look at it on the daily basis, remember that 200 was support for us yesterday, and the Chiku span yesterday came down to touch the 200. Today, it didn't. It didn't make any move towards the 200. The 200 acted as support for the Chiku span, and the combined 200s, the SMA and the EMA, were support yesterday. And again today, you see the candle came down and retested to see if there was buyers at those moving averages. So now let's look at the weekly, as we've been doing for a while. And we're staying above the flat cloud now that we've come and we've punctured it, and we've gone through those two 200 and simple and exponential moving averages that are the daily moving averages. This is a weekly cloud. These are the daily moving averages that I'm able to plot with Motive Wave. What happened to Apple? Apple is gone. So let me go into here and go to Apple. So Apple on a daily basis. Apple never got back to its opening 15-minute high, which is the top of this green zone here. So it had its best when the buyers came in the first 15 minutes. That's the big players, the mutual funds, the ETFs that are buying. They force the price up, and then they're done trading for the day, and the high-speed traders come in and take some profits. So on a daily basis, we see the Chiku span got support yesterday on the cloud, and today support on the cloud as well. This shows you now the importance of the Chiku span, particularly after we've gotten support here on the 200 and support here on the 200, then support here again on the 200. Now, since we've broken that, we're using the cloud here for the Chiku span as support. And if we look at a broader 1 week, really nothing informative there. So what we're looking for is to make sure that the Chiku span stays up on the cloud. And if it does, then tomorrow will be another up day for Apple. If it's a down day, then we're going into the cloud, and that's a whole new story. Caterpillar, nothing. Gold had a big day today. The gold miners up 1.76% today. That's good to see, but the Chiku span is still getting resistance on the candles here. We need to see it break above the candles and head towards the 200-day moving average. We still have this bearish cross that occurred Friday of last week of the 50 and the 200. Intel finally broke above its 8-day moving average for the longest time since April the 25th. It's been below its 8-day moving average. We see another bearish cross of the 50 and the 200 in Intel. Whirlpool, certainly nothing tells us to buy this stock. It's a shame because we had our eye on it back here and we were hoping that, you know, the good economy would move it up, but then came tariffs. And lastly, WDC, my chip play, still has been below the 8 since April the 27th. So that wraps it up for today. Tomorrow, probably not much is going to happen tomorrow.